here's what I traded today on December 20th. So first thing in the morning when I woke up, I saw that there was an RBV bullish setup forming in here. The bias on gold currently daily and weekly, according to the bias video from my YouTube channel, is currently bullish. So I was mainly looking for buys. Okay, so then we have this liquidity grab over here, or we have price going below in a previous swing low, grabbing liquidity, and then it makes a surge, quick surge in price, and it breaks an intraday market structure from the left side of the chart. In this case, it was the high of the New York kill zone from yesterday. During the Asian session last night, it was last night in Europe, by the way, we had seen price going lower. So basically it's making a pullback, retracing towards discount levels. So what do we want to do when price is in discount and we have a bullish bias? We're basically looking for buys. If we zoom in a little bit in here, you'll see that this is basically the RBV setup. We have this bearish candle, which is eventually turned into a bullish order block. And then eventually on the 1 minute chart, we had the confirmation for an entry right about there during that M5 candle. And then if we take a step back, this led to a nice setup, which went for 200 pips by the time we were approaching the end of the London kill zone. The next trade was a bearish setup, which was basically against the bias. I treat these kind of setups as low probability. The reason why I took it, however, is because it met some of the criteria that I'm currently testing, which is it has to be above the Asian high, which it was. It has to be above the 12 midnight open, which it was. 12 midnight is this purple line. We had the RBV setup forming. And if we go down to the 1 minute, we'll see that we had that nice drop. So basically a bearish expansion to the downside, more like a reversal. Then we had a consolidation, and we are basically anticipating another expansion price leg to the downside that should be pretty much of the same size as the previous bearish price leg that we have. So basically this one. Eventually it did pan out quite nicely. And then as price was going lower, I was also eyeballing this bullish setup because don't forget that we were on a bullish bias. We had a liquidity grab, and this move to the upside eventually broke the high of the London kill zone from today. And right now, this bearish trade that I was actually in, I've also treated this as a possible pullback down into discount level, so below the 50% level of this new fib. Once price got there, I'm starting to stock an RBV setup, which is what? I need the creation of a bullish order block, which is this candle over here. And then on the 1 minute chart, I want to see a confirmation. So basically like a push to the upside, a 1 minute candle that is going to really show me the willingness to continue to go higher. And that actually came during the trading of that candle, somewhere about there. And you can see that in this case, the drawdown was almost inexistent. Also for the previous setup, don't know if I showed you, for the previous setup, the drawdown was about 2.6 pips. And for the bearish setup that I took, I had a 0 drawdown. And then for this setup, also like, I don't know, less than 3-4 pips drawdown. In here, unfortunately, I was not really at my desk to take this trade right there. So my entry was a little higher about there. So basically, you guys know that I like to take profit about 80 to 90% of my lot size. I like to take it at about 20 pips. So because my entry was about 10 pips later than it should have been, I treated my 20 pip TP1 as if I entered where I should have. I actually took most of my position off because I was also trading 50 lots. I took most of that out at about 10, 11 pips or so from my actual entry, which was somewhere around there. Then price came and took my runner out because I did leave a 2-lot runner. It did take me out, and then it actually continued to go higher for an additional, like, it was just crazy. So basically from where the entry should have been 1801.50, it went to 1820.70. So that's about almost 200 pips, 190 pips, right? So it's just insane. So yeah, these are the 3 setups that I took today. Also, as we were approaching the end of the New Year kill zone, we had this beautiful reaction. We had a pullback with a nice bullish candle, which could have signaled to us that we're going to see price continuing higher. But then we have this bearish candle that actually, let's say, quote unquote, invalidates the bullishness on that candle. So now I'm thinking, okay, we might actually see a deeper pullback going lower. So what's the range that I'd have around here? Do I have at least 20 pips? And if the answer is yes, then I will treat this bearish setup as a low probability setup, because remember, the bias is currently still bullish according to the way that I interpret market bias from a daily and a weekly perspective. Seeing the reaction that we had from there, I actually went to a higher time frame and see, okay, what was the reaction all about? You can see that I have that shaded area, and dropping down to a lower time frame all the way to the 5 minutes, I've actually seen that there was a nice fair value gap that was created there previously. I don't usually trade fair value gaps, you guys know. It's not part of my normal trading routine. It's not part of the mentorship that I'm teaching. However, I do like to keep my mind open to new opportunities to trade, right? So I've seen that, and now fast forward to present moment, or the time of me taking that trade actually. I've seen that nice reaction from there. You can see here that we have candle poking above these 2 candles highs, which if you look at these 2 candles, they look like equal highs on a very micro level. So then we take the buy side liquidity above there, and then this quick reaction to the downside is signaling to me that we might actually see a pretty nice reaction from that old fair value gap. When I've actually seen this bullish candle over there, I've just kind of like gave up on the idea of trading like a bearish pullback. But after seeing this bearish candle, it actually had me thinking with a different perspective. So now I'm seeing, okay, so I have sell side liquidity, okay? We have some sparse areas that could be filled over there. And now we have this reaction, like an imbalance coming off of a old fair value gap with a new imbalance. And now this acts as buy side liquidity. So if we can grab the buy side liquidity above that high and then form the RBV, and then we're anticipating it to drop further, okay, till it's going to reach some of these areas and fill them in, which is exactly what it did. So yeah, this is what I've traded today.